Okay, well, welcome everybody to the Q1 2026 housing market recap. This is a call that I have done for the last, I think, year and a half, maybe. And for those of you who do not know me, my name is Karen Stone. I am a local realtor here in Park City. I am also licensed in New York City, where I started selling real estate in 2008. And if you're doing the math, that means I got into the business right before the Great Recession. And all I've done throughout my entire career, aside from changing markets in 2020 during COVID, was to adapt and to watch and live through the many ups and downs of the real estate markets, both in New York City and now here. So I still have a lot of insight and mentors and people that I follow out of New York, which I find is a really big asset to me because I many agents here in Park City can really only speak to the Park City market. But because of the calls that I'm on a regular basis, which is generally weekly, I get intel on what's going on not only in New York, but also on a macro level. So the point for tonight is to really dive in on what's going on a macro level, which again, very few people talk about. And then we're going to dive in a little bit deeper into the Park City market, where I have a bunch of slides. I'm going to be talking kind of high level for all of Parks, like Greater Park City. And at the end, I will ask you if you want me to look into your specific area, price points, sizes, things like that, whatever you might want me to look into. Um, I do I do identify as a stats geek, so you might see quite a few stats that some may make sense and some might not. But again, you will get the recording of this, and there are documents and the press release that will be released from the Park City Board. It's still a little bit early. Hopefully we'll be getting that by next week. So what you're seeing tonight has not been released to the public yet. So I'm going to go ahead and share my screen and dive right in. All right, so that's me. I am with Coldwell Banker here in Park City in New York. I'm actually with the agency, and there is all my contact information. So first, we're going to start off with let me just make some minor edits here. We're going to start off with the macro housing market. Again, I like to talk about what's going on a macro level because it does really help to make sense of what's going on locally. We really have to understand what's going on a national level, right? So I think all of us can agree that we've had quite a bit of a first quarter of the year, from really terrible snow to Sundance to a war. We've certainly seen what I like to call a spring pivot. So we actually reached the lowest point in interest rates on February 26th, which we were all celebrating. We finally got below 6%, which is generally the percentage point where a lot of buyers finally say, like, okay, that is our target, and now we're going to get off the fence and we're going to go buy. And then 2 days later, there were coordinated strikes, and obviously we all know what happened on that day. And all of a sudden, the world kind of paused with uncertainty. We were just really unsure of what might happen and for how long. And because of that, the mortgage rates started to go up. We have seen them fluctuating over the last few, weeks, like in the last week or so, and this week as well. But overall, what we know across the country is that demand is not disappearing. It's just been interrupted. Right. So there are still buyers out there, and we're going to talk a little bit in the next slide about where the rates were and really just kind of put it into perspective, like what the consumers might be feeling today and what they're comparing it to, right? Like at this point, 6 years ago, we were looking at interest rates, as you can see from this chart. During COVID, we were looking at interest rates that were 2.65. The peak was at 7.79 in October of 23. The historical average over the last 50 years is 7.8%. So when you look at this broader number of like, where are we today? We're actually sitting below the average, below the peak, and we are still sitting below where we were last year. So it's not as if rates have drastically changed. The people who have been ready and kind of succumbed to like, okay, I'm gonna get a 6 to 6.5% rate. Some banks will give them better rates, but they've kind of already been like, okay, like I get it. This is what it's going to be. If I keep waiting, I'm like, they're never going to go back down to that. And what most people are saying is like that was a once in a generation anomaly. So if you got in during that time, congratulations. From the Fed standpoint, we have to remember that what the Fed does is not directly connected to what the mortgage does. So when we talk about rates, we do have to separate them and look at them as independent. The current federal fund rate is 3.5 to 3.75. As of this week, there is a 97.9% probability that the rates will stay. And of the charts that I'm looking at, there is likely not going to be a drop this year with a 27.5% potential cut in December. But I've pointed out a few little bullet points here with like what could happen and why and what impact it can have. So we all know that Jerome Powell should be out this May. Warsh has not been confirmed yet. One thing about the market in general is when there's a transition, that equals uncertainty. So as you can tell I'm not providing you with a chart, but just with the fact that there's a potential drop cut in December basically shows that the Feds are basically planning on keeping the rate consistent. Warsh says he's independent. President Trump says he expects lower rates, but those two things cannot both happen at the same time. The Fed is looking for these three things in order to cut the rate. They're looking for lower inflation. They're looking for a weaker job market, and they're looking for stable oil. None of those are happening right now. If Warsh is decides to or is forced to cut the rate for political reasons rather than economically, mortgage rates could actually do the opposite and go up. Because as I note here, the bond market punishes fake independence. So JP Morgan's base case isn't cuts in 2026. It is possible, depending on how long the war goes on, that there could be a hike, that there could be hikes in 2027. And so the buyers that are waiting for the Fed to save them may be waiting a very long time. And in summary, nobody knows what might happen, right? It's all kind of dependent. Could be dependent on a tweet, could be dependent on ships moving, could be dependent on the strait opening, could be dependent on wars and who's fighting whom. So there's a lot that we just don't know at this point. Moving on, we have to talk about overall consumer sentiment. And this chart is not very attractive. But you know what? That is where we are today. Overall, what we do like to see is that pending home sales overall is still up for March on a national level, with new listings nationally going up at 21.2%. And on a national level, we are very much still strapped for inventory. So that's why we keep hearing conversations about incentives and who's allowed to buy what and corporations not allowed to buy real estate. And and especially here on a local level, right? Like Salt Lake is now offering allowing certain homes in certain areas and certain sizes to cut up their property and build new homes, right? Or add a new home to their lot, right? Because they need more inventory overall. So that's a really good number because we are not anywhere remotely close to where we need to be on a national level when it comes to housing. Um, this is a really interesting conversation that I had with these guys out of New York. They're not really economists, but they do really dig into the stats. Most in many markets, some of it is seasonal. For us, it is obviously very seasonal. There is a typical cycle and a typical spring market. And if we look at let's just look at March, April, May, over the last 6 years, there has consistently not been a normal, right? So when people come to me and they say, we're waiting for something to happen, basically what we're waiting for is the next disruption, right? And in this chart, I break down what those disruptions have been from from COVID to the demand frenzy because of COVID to the rates going way down and then shooting way up, like all of a sudden in the middle of the year. We obviously peaked with the interest rates in 2023. Then we have the election. Then we had tariffs. Then now we have the war, and it's just like one thing after the next. But the good news is, as you can see from the bottom right there, Park City had its third highest quarterly volume this past quarter, this Q1. So we also have to keep in mind that what happens on a national level does not necessarily happen here. This is just a breakdown again of what's happening on the national level, comparing Q1 2025 to Q1 2026. I felt that this was really important because we are so seasonal and there are so many different influences in our market that we really do have to look at, like, let's just look at this on a broader scale, January to March, what really happened. So as you could see, the mortgage rates got better. There was another disruption. Sentiment got worse. The General Park City, GPC, stands for General Park City or Greater Park City, I'm sorry. The absorption rate, meaning if no other homes hit the market today, how long would it take to absorb or to sell all of the existing properties? In Q1 of 2025, it was 5.3 months. Now it's 8.4 months. So that's indicating a softer market compared to the national absorption rate, which was 3.5 months last year and 4.1 months this year. Okay. Now let's talk about the General Park City housing market for Q1 2026. I like to start with these charts to show you just on a broader level what's going on with supply, right? And what we're looking for and what we've just needed time to exhibit is some kind of consistency with our inventory. And as you can see with the chart on the right, we see that inventory was way up, and this is all of whatever is in the Park City MLS. That's where these stats are from. And if you know Rick Klein, he is a mortgage broker and he's one of our stats guys on our committee. You could see that overall the inventory was much higher pre-COVID, right? Then COVID happens and it drops, right? A really, really steep drop. And then since then, what I want to point out is how, like, kind of like they look like waves. That is a very seasonal. What you can see is there's very seasonal consistency, quarter over quarter, season after season of inventory. So there were 889 listings as of April 1st compared to 789 as of April 1st last year. So it's a 13% increase year over year. To break that down, condos were up 31%, single family up 7%, and vacant land down 13%. I want you to take this into consideration because what I'm showcasing here is all product. However, you will see, and one of the questions that I ask Rick regularly when we have our calls is, how do you break this up based on new inventory, meaning new construction versus existing inventory, which I'm going to go into. So again, from an inventory standpoint, this is just a breakdown of where this just summarizes that. So we have more supply. We have more in terms of condo listings. Many of those are around the Jordanelle. Single family homes, kind of a growth is slowing. Vacant land is improving, and we are well within the range of the inventory. Now let's talk about the general demand. So looking at this again from pulling out here, we can see that peak demand was actually Q1 of last year, 2025. The next one, the second was Q1 of 2021. And then this past quarter also had very high demand. And you can see here that we break this down. The blue is condo, the red in the middle is single family home, and the yellow is um, vacant land. So I kind of think what's interesting here is exactly how much of what like where is the actual demand, and we can see that the demand was more in the condos this year, way more condo heavy than single family home heavy. Okay, let's talk about prices. We all want to know, what is our asset doing here in Park City? Overall, the median price for last quarter was up 19% year over year. The national average was only up 0.8%. Sales volume, meaning the total value of all of the homes sold, was up 9% year over year compared to a decrease of 3.6% on a national level. Existing homes, that means not new construction, that was up 12% compared to 1.4%. And single family home average price was up 18% and up nationally 1.2%. So if you're just looking at this, again, from this 30,000 foot view, we can clearly see here that the prices continue to go up, the values continue to go up. The number of deals has come down a bit, but the values continue to go up. And again, I'm going to break that down between new construction and existing. But as you can see here, prices in the long run since 2001 have appreciated 7.1% annually, compounded monthly. So we're looking at that red line. So when we talk about how much your property could potentially go up for the year, 7.1% is kind of what we're aiming for. But again, that's a much bigger, like that's condos, single family homes, and land. So we do have to break it down and look more on a local level, neighborhood level. And I'm going to do that towards the end of this call. Here is where we look at those median and average values. This is a really complex chart. We've got median prices in blue, average price in red, and the number of transactions, which is on the right axis. And you could just see there, if you just like follow the number of transactions, like they continue to go down, but I mean, compared to like the peak, right? However, the values continue to go up. So we're doing fewer sales that are more expensive. Okay, so where is this all coming from? So the Jordanelle is a huge, that is like, that's, if we took the Jordanelle out, all of these stats would be incredibly different. So we went from 14 transactions to 30 transactions, which is obviously a huge jump. The volume went up massively, and Mayflower alone went from 2 to 11 sales. Most of this is at the Mayflower, sorry, Marcella, and all of the development around the Marcella. So we're talking the Hyatt, the whatever else is in pre-sale right now and or closing. So there's just so much inventory that's also Mayflower Lakeside. Like there's just a lot of inventory that is trading over there that is skewing a lot of our numbers. Snyderville Basin, broadly speaking, there's a lot of huge increase in the volume. When I look at the stats overall, a lot of this includes promontory. If you're not familiar with like what Snyderville Basin includes, that includes Kimball Junction, Silver Springs, Promontory, Glen Wild, the Colony, the canyons overall. So that's a lot of areas with a lot of very high priced homes. So single family homes in general went up on a massive level. And most of that was like three sales that totaled about 23 plus $1 million. So we've got quite a few anomalies in the colony. Then we break down Promontory had 22 sales with a median price of 4.8 million, which was a 31% increase. Now, Promontory has been releasing a lot of developer homes, so that is where a lot of this inventory is coming from as well. So compared to the resale, right? And then Glen Wild had five sales averaging over $6 million. So that's all leading to this massive $331 million in volume for last quarter. Within Park City limits, we're kind of holding our price in general. So we're down. There were only 26 sales. We generally don't see as many homes trading in the general Park City limits, which is from the McPolin Barn and south, right? So everything like that includes Old Town as well. So the median price remains unchanged. Old Town volume did go up, like volume again, meaning the value of the homes, with one fewer sale, but there were many that were sold in very high price points because there's a lot of new development over there. And I wanted to point out that Jeremy Ranch is like the baby of the or the star of the quarter, if you will. 67% more transactions in volume, transactions and volume more than doubled to 27.8 million. From a personal anecdote, I did recently get a listing in the Park Meadow, in the Jeremy Ranch area. It had a phenomenal view. Normally, the market for Jeremy Ranch is closer to late spring and summer, because oftentimes we do attract people who are moving here for work and for schools. But we did see that home I put under contract within a week. There are others that are kind of sitting, but that is where a lot of the under $2 million single family homes are located. So that's why that's so attractive. And my strategy personally with this particular homeowner was, maybe we should wait until seasonally it indicates that this is a good time to sell. But after talking with a few agents who were selling fairly quickly, we decided to list it earlier and we had very positive results and we're closing in June. Okay, so let's talk a bit about new versus existing construction. So again, new construction versus existing homes. Let's just compare these numbers, okay? So areas went on the left side. So single family home, that's SFH. Areas 1 through 9, that's everything from the barn and south. So in town, you could see the median price uh, went up fairly drastically, right? A good over $1 million over a year. However, the existing inventory, the trend went down, went as the prices went down about 12%. This is where we get really granular, right? Where one headline says one thing, but when we really dig in, we can see just how impactful the new construction is. In Snyderville Basin, we see a decent increase in single family homes, mostly flat for the existing homes. The condos is really where the story is. In terms of price, we see an in town 4.2 million compared to 5.5 million, going up at 13, and which also went up 13% in the inventory that is currently, built, not new construction. And areas 10 through 29 in Snyderville Basin went from 1.25 to 1.9. And for existing homes, that trend is down 9.5%. And then you've got Heber Valley, right? There's a lot of new construction going on there. So went up, nominally, not huge numbers there. I think in large part because there's a lot of new construction and there's just I don't know what the real demand is out there for these homes, but they're building them at a pretty rapid pace. So there's just a lot of new inventory. But the trend out there, and this is one of those stories about like people being priced out of Park City or wanting something newer. They're going, I mean, where can you find a new single family home in Park City for less than $1.2 million, right? Like that's happening in Heber Valley. Okay, let's look at the percentage of the sales per area. I think again, this is a really important stat when we're looking overall at the sales and like what percentage are most of these sales happening. In one of the previous charts that Rick released, he said about 35% of all of the listings in the MLS was new construction. So in this chart, we just break it down, the number of listings in town, condo to single family homes, where you can see here exactly what I said earlier, where the condo market, 48% of the homes are new and are new construction and set of the condos, I'm sorry, are new construction and single family residences make up 75% are um, new construction. So that's a huge number. And again, we have to see that this does impact all of the headlines overall. Okay. Absorption rate. Ugh, I don't want to like dive too much into this, but maybe if you look just at the right column, the condo market overall is slowing. Part of the reason that it's slowing, I will go into a little bit in the next couple of slides. The median price is still going up, but it's slowing. And I do have a better chart for this, which I will probably have to swap this out. Um, what I have, yeah, I'm sorry, I didn't really review this one, but what I have is like a breakdown of price points and how long they tend to take to sell. So I will see if I could find that chart and share that with you before we get off of here. Um, Let's look at the overall market snapshot, transactions and volumes. Again, this is all of Greater Park City. So the number of transactions in Q1 2025 was 1674. So there were fewer closings, existing homes only, not new construction. So down pretty significantly. The number of homes also down about 10.2%. Single family homes just in town was relatively flat, and single family homes in Snyderville Basin and Jordanelle area went up, went down slightly, quarter over quarter, last quarter. I'm sorry, Q1 26 compared to Q1 25. With existing homes, that the number of transactions went up, and overall the median price, as you can see, went slightly down, which again is kind of interesting, but 12.5% increase. So for existing homes. And I want to just point out the yellow part on this slide. Q1 25 was a record quarter driven by new construction closings. Founders Place, which is in Deercrest, and Deer Valley East Village kind of led the charge there. So we had again like anomalies of last year that impacted all of these numbers, including number of sales and the volume. So Q1 2026 existing only numbers are healthy. Greater Park City median is up. The basin existing properties is all transactions are up, and the volume drop is the new construction supply being purchased and sold, right? And closing. It's not necessarily an impact, like it's not necessarily that the demand has changed. It's just that those homes, came on the market, and they generally, don't put them on the MLS until they're basically under contract, especially a lot of the new developments. So if you were to go over to, let's say, the Four Seasons, you would not necessarily find those homes on the MLS, but you could go to the sales office. You could talk to Sheila. She could sell you one of the units. And once it goes pending, then it hits the MLS. So that's just something for you to know. These are things that we're looking for on a local as well as a national level. Obviously, we have the tariff uncertainty. This is causing high net worth buyers to pause on large discretionary purchases, which I didn't go over this, but we are seeing really decent demand in the luxury market. So in the upper end of the market. It's kind of bifurcated. It's a K economy, which we're seeing overall on a macro level as well, where the ultra wealthy are doing quite well. They've got money in the stock market. They're retirement funds, they're doing great. And then you've got the people who are living paycheck to paycheck who are hesitant to make any moves. They can't afford to make any moves. They're losing their insurance. Their gas prices are going up. The cost of everything is going up. So you really do have two different things going on here. So, and the same is true here in Park City. So the ultra luxury homes are still selling. What I'm finding on a local level is, probably within like the last 3 weeks or so, I saw like, well, since the war started, there was an insane pause on anything under $1 million, specifically in the townhome market. And only recently did I put a couple of them under contract. So, maybe it was seasonality. They are not ski products, so it's hard to really tell. But we definitely saw a pause. But in talking with agents today and over the last few weeks, I have heard that there is a little bit more people are coming to town. Maybe they're feeling a little bit more comfortable. They're not frozen in time, waiting for something to happen. They're just saying, listen, this is when I need to buy. I'm ready to buy. I found a good deal and we're going. So the tariff uncertainty was obviously a contributing factor for last year. Interest rates are still impactful, mostly in the mid market, right? Um, it has less impact on the luxury cash buyers. But in case you haven't heard these calls before, about 50% of the deals here in Park City are still cash. So if you are, considering selling or you're thinking like, I wonder who my buyer would be, like, are they going to be super sensitive to the rates? We have to remember that 50% of the market is still cash buyers. Financing costs continue to limit buyer activity in more affordable segments, which we don't have many affordable segments here in Park City. Insurance costs definitely do impact us here in Park City. Regardless of like where you are, many of you on this call are probably getting higher, paying higher premiums because of the fire risks. So that is certainly something that we need to factor in when if and when you're considering selling. And then the obvious one is the ski question, right? Like what's going to happen? Are the conditions going to improve? Again, anecdotally, I was selling a property in the Three Kings area. They're in like Thanes to Old Town, right by the base of Park City. And they, starting in December, January, February, their renters were just pushing their reservations. Towards the end of the season is when I started to hear people complaining that like they needed to give 60 days notice in order to get out of their rental. What how like short-term rental, right? So I think that people who own properties that are very sensitive and reliant on the ski season and on Sundance are going to potentially, we won't see this probably this year, but potentially next year we'll see it once they do the numbers and they see like, all right, did my income go down because of the bad season? Like, is now a good time to just get out? Um, Overall I'm almost done, guys, and then I'll break down all of the local stuff. But what you need to know is that things here do seem to be slowing down. However, last year's closings were inflated because of new construction. So at this point, what we're going to be looking for is a new normal, not necessarily a downturn. Prices are still up, just not everywhere equally. For instance, if you bought or know people who bought a property in 2021, that was the peak, right? 2021, early 22. Their values are not necessarily up right now because they bought at the peak. So again, the headline is driven by the new construction premiums, but the existing homes appreciation really, really, really varies. So again, there's not a blanket statement that I can give you. And anytime I go meet with people who are considering selling, I really dive in on the stats. And Many of you have been the recipient of my comp reports, and this is exactly why we need to really dive in on each individual home, on looking for properties that are most similar, because the county has a way of kind of phoning it in or calling it in and saying, well, all the homes on this block or in this area sold, sold for this price, and there's the average price per square foot. And so therefore, that's what this home is worth too. And we all know that all of our properties are unique and they have different things, that make them special, or maybe they need some work, whatever they may be. It's really hard to make a blanket statement about our values. Number three here, what we see is that again, inventory is rising slightly, but still well below the norm. More condos are coming on the market, but we're still nowhere near pre-COVID levels. So, it's good that the inventory is going up. And again, every quarter, every month, we have to look at how much of that is new construction. Because again, if we look at the numbers, we will see that especially right now, people who don't need to sell are not selling, right? Of everything that I'm selling, which I had about 6 or 7 listings over the winter. These were people who just decided now is the time, right? They didn't want, most of them were second homes and they just want to cash out. They made some good money and they just want to move on with their life. They weren't waiting for a market to shift, right? And we will continue to see that on a national level. We call it, I think, the 5 Ds: death, divorce, um, marriages, all of the things, diamonds, right? All of the things that life kind of brings to us, diapers that forces us to make a move when it comes to homes. Um, and number four there depends on what you own. Park City is several markets in one. So this market isn't good or bad. It's just very specific based on where you are, what you own, and how it's priced tells you everything. Many of you probably have a decent amount of equity in your home. So this is all very good, and part of the reason why people are not in a rush to sell, especially if they've locked in or refinanced or they don't have a loan. It's hard to stomach, paying, getting a loan or finding something that is equivalent or better than what they have. However, what we know is that here in Park City, we continue to hold our value overall because of scarcity. We seem to be one of the only ski resorts, at least here in the Mountain West, that does have land where we can build new construction, right? If you're familiar with Aspen or Vail, they don't really have a whole lot of land, especially mountainside, where they can all of a sudden like build thousands of units, right? So that is definitely driving that the Deer Valley East Village is definitely driving the demand market wide. We still have people coming here from the coast, over Aspen and Jackson Hole and comparable markets. And we still see that new construction is demanding a premium and that existing homes can sometimes trade at a discount. So your home has relative accessibility. And I would just say if you're considering selling, this is not the time to be testing the market. Let the market speak. I promise you, the market will not lie. What we're looking for the future is the absorption rate rising, right? Longer time on the market. So pricing discipline is non-negotiable. And we do obviously also have to look at the insurance costs. And that could be a buyer objection during due diligence. This is the breakdown of single family homes only per area. You remember you heard me talking about areas 1 through 9. So areas 1 through 9, for example, Old Town, Thames Canyon, Lower Deer Valley, Deer Crest, Upper Deer Valley, Empire Pass, Erie, Prospector, and Park Meadows. That's all within the Park City limits. So some things here to look at, and I'm gonna keep this kind of, I'm not gonna zoom in as much because I want you to see the quantity sold up here, percentage change, volume, percentage change, and then average, percentage change, median, and percentage change. So when we look here at quantities sold specifically for Pine Brook, we see that in Q5 there were in Q1 of 2025 there were five homes sold, and last year, this past quarter, there were none.
Mm.
And one of the biggest frustrations that we have here in this market is that we have so few sales to count that it's hard to to determine what's going on in an area um, based on, five sales or three sales, as you can see. And, even Old Ranch Road, there were three sales compared to three sales. However, the volume says a lot, right? Like the volume and let's just look at Old Ranch Road, for example, went from 28 million last year and this year barely 12 million sold, right? So, but we're only looking at three sales. Right now, these numbers might not matter as much if, again, if you've been receiving my comp reports and you've tried to appeal. This is just a quarterly report, but what you can see here in this right here, you've got year over year, right? This is really where the magic happens. And what our board says is anything under 10 sales really does not make a market. So for Canyons Village in particular, there were six sales in all, from April 1st, 24 to March 31st, 25, compared to nine last year and this year in that same period. And as you can see here, the volume went up massively with just three more sales. Just three more sales, it went up massively. So what the county tends to look at is these numbers, and they're like, well, the average price went up 73% or 78%, right? These are the numbers that they might throw out at you. And you're like, but wait, like there were only nine sales, right? So if when we get to that point, which those should be hitting your mailboxes in late July, and if you want to receive a complimentary comp report, I will be running those reports again this year, and I will help you work through those.
And thank you, by the way, for that. I've won the last two out of three
There you
appeals. I have gotten at least some movement on them. So
go.
thank you.
Good. Well, then you just killed the objection that if you try one year and then the next year they turn you down. So you just never know with these people, right? Park Meadows. Okay, so going up to Park Meadows, um, we see just quarter compared to the quarter, nine sales in Q1 of 25 compared to six sales in Q1 of 26. So it's a decrease of 33%. The volume went down almost 50%. Average and median only went down 2%. So that's not terrible, but year over year, you can see exactly the same number of sales. So that's a 7% decrease in volume and 7% decrease in the average and in the median. Same number of sales, but the values went down. Okay, so this is a chart that I can use. These are stats. These are within we can access them from our MLS. They're provided by a company called Domus. So lots of cool stats here. I spent about 2 hours with the team today from all different brokerages, and we were like completely geeking out on this. So Steve, I'm gonna call out some of the stats here. So I can break this down by area, single family homes. So I'm gonna hit Park City. I'm gonna hit Park Meadows. We'll run up to, let's say, up to $5 million. We'll include new construction, and again, we're only in single family homes. So you can see here the median price. I'm just going to zoom in a bit. So you can see the median price at 3.625. There's another closed sales. I really like looking at this. Oh, and we can also like break this down like monthly, quarterly. So this is what happened, right? Compared to Q1 of 25, where it was 2.98. This year it was 3.13. So as you can see, prices did go up. Even though my chart said that they went down, I broke it down only up to $5 million, right? And that's the median sales price. Closed sales, I love this stat too. And what's interesting here, and I brought this up today, like when you look at, say, 2006, like we're kind of hovering around the same number of sales there, right? I mean, we did go up a bit, obviously during COVID, that peaked there, but since then we've kind of been going down, right? So what's the reason for the decrease in the closed sales per quarter? And if you do have interest and you want to know about like exactly which homes sold and what they were, this is something that I just learned today. This will break down exactly which homes sold and for what. Again, if you don't know this, not again, but if you do not know this, Utah is a non-disclosure state. What that means is that you will not see the closed price on any public platform, but I have the closed price. So that's why I run the comps for you. So I can see exactly what the homes were, where they were, the range, etc. So there's a lot of data here that I have to play with. But hopefully this was kind of insightful. And what I also want you like the takeaway, let's just say that somebody in Park Meadows is considering selling their home and there've already been 6 sales this year, for example, right? And they want to put it on. Well, what's the chances that that will sell, right? Or if they think they're going to be the only one and there's maybe been 10 sales this year so far, but last year there were 20 sales, right? Like they could be one of those that trade. So that also impacts the absorption rate, right? Like exactly how many I sell in like Black Rock Ridge, I tend to get a lot of listings there. One neighbor tells the next, tells the next. And like I've sold three, I have one under contract right now. Let's hope it stays together, but three in the last like 8 months all on one block, right? So there's a lot of inventory and conversations that we could be having. Then I'm going to thank you so much for tuning in tonight. I will be sending recaps and further information that I will be doing a little bit more dissecting. I will also do my best to get out this recording within the next few days. And I do need to check with the board though to see when I'm allowed to release those actual charts and those stats, just so I don't do it prematurely. But I feel like there's enough content here that I can send a couple of emails. So again, if you are interested in having your comp report run, whether you plan on appealing or not, please just let me know. You've got all my information in those emails. I appreciate if you pass my information around as well. Many people last year passed it around their community, their condo complex. If one person appealed, most of the time the neighbors also wanted to appeal. So I appreciate any and all referrals. And if all you are looking for is to follow the value of your home, I do have another tool called Real Scout. Many of you receive them, but if you don't, I can send you emails automatically every month from this tool. A lot of our tools do not show closed sales and closed numbers, but this specific tool does. So many agents might offer, do you want to follow the value of your home? And there's like an automated system that does it. But the reality is that none of those tools, and I've tested them all, none of them have access to all of the closed data. So by doing this on a monthly basis where I just send you, here's what's active, here's what's pending, here's what's sold, we can discuss your specific home, but at least you can see what's going on in your community. So with that, I'll leave it for any other questions. And if there are no other questions, then I'll let y'all go.
Thank you. Good
You're
job.
welcome. Thank you.
Thanks, Karen.
Of course. Everybody enjoy where you're at and safe travels back here when you come. And if you'd like to meet up for some coffee, I would love to connect with you. So thanks again for tonight, and we'll see you next time.
Thanks, Karen.
Yep.
Bye.
Thank you.
Of course.
Karen, I've got one question maybe offline when we're done here.
Sure, yeah. Why don't I stop? Hold on, cancel. Stop.